Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 28th, 2025, we're putting Meta Platforms, ticker Meta, under the microscope, analyzing both recent news and the latest chart data. The air around Meta is thick with anticipation, largely driven by its upcoming Q2 earnings report, which is set for Wednesday. Analysts are overwhelmingly optimistic, with many recently raising their price targets, citing robust advertising revenue and groundbreaking AI initiatives. Meta's massive social media ecosystem, including Facebook, Instagram, and WhatsApp, boasts over 3.4 billion daily users, making it a digital advertising behemoth. The company's bold superintelligence network plans, aiming to compete with other tech giants like Google in the AI space, are a significant focus for investors. This strategic push into AI, coupled with the expected rollout of advertising on WhatsApp, could further bolster its already impressive revenue streams. In the last 12 months alone, Meta generated a staggering $170 billion in revenue and $67 billion in net income, showcasing immense financial strength. These strong fundamentals paint a very positive picture for the company's future. Now, let's turn our attention to the charts to see how this news aligns with historical and recent price action. Looking at the daily chart for Meta, covering from March 2024 to late July 2025, we can clearly see a powerful long-term bullish trend. The stock has been on an impressive upward trajectory, consistently making higher highs and higher lows over the past year. A notable event on this chart is the significant pullback we saw in April 2025, which saw the price drop sharply from around $580 down to the $440 level. This dip was marked by extremely high volume, indicating strong selling pressure at that time. However, this was met with an equally strong V-shaped recovery, almost immediately recouping losses and forming a new base. This resilience showcases the underlying strength and investor confidence in Meta's long-term prospects, especially concerning its core business. The swift recovery post-April dip suggests that buyers are eager to step in on any significant weakness. This aligns perfectly with the news of strong advertising market recovery, reinforcing the bullish sentiment. Focusing on the more recent price action on the daily chart, we observe Meta hitting a new record high of $747.90 on June 30, 2025. This all-time high was quickly followed by a short-term pullback, bringing the stock back into a consolidation phase. The price is currently hovering around the $712 to $713 range as of our latest provided data from July 25, 2025. This recent correction is a healthy development after such a strong parabolic run-up, allowing the market to digest gains. The news mentions the stock is near its 21-day moving average, which often acts as dynamic support during uptrends. Monitoring how the price interacts with this moving average in the coming days will be key. The $710 level has emerged as an initial support, as seen in the candles from mid-July. Breaking above the $720 mark would signal a potential resumption of the uptrend towards the all-time high. Switching to the 1-hour chart, which provides a more granular view up to July 21, 2025, we can analyze the immediate price dynamics following the June 30th peak. Here, we see the choppy consolidation around the $710 to $720 zone, illustrating the struggle between buyers and sellers in the short term. The $710 level has acted as a key psychological support, with the price bouncing off it multiple times. This level is reinforced by previous price action and serves as a critical short-term pivot for traders. Conversely, the $720 level appears to be a near-term resistance, where upward movements have been met with selling pressure. Breakouts above or breakdowns below these hourly levels often precede similar moves on the daily chart. Volume during this consolidation has been moderate, but spikes often accompany attempts to break these levels. The stability around 710 suggests that, despite the pullback from the all-time high, a strong base is being built. However, it's crucial to remember that our hourly data only extends to July 21st, so more recent live data is always preferred for current hourly trends. Now, let's zoom in even further to the 15-minute chart, which covers the most recent intraday movements up to July 25th, 2025, providing the freshest perspective. This time frame reveals the finer details of the consolidation, showing tighter ranges and quick reversals within the daily candle formations. Notice how the price has repeatedly tested the $712 to $713 zone as a strong intraday support, with significant buying interest emerging each time. This area represents a clear demand zone for active traders. On the upside, the $718 level has proven to be a consistent intraday resistance, often leading to temporary pullbacks as profit-taking occurs. Observing the volume on these smaller timeframes can provide clues. High volume on breakouts above 718 or breakdowns below 710 would confirm the direction. For short-term traders, these immediate support and resistance levels are crucial for setting precise entry and exit points, especially when anticipating a quick bounce or a decisive breakout. The current range-bound movement within the $712 to $718 suggests indecision, awaiting a catalyst. Always combine this intraday analysis with the broader daily and news context for a complete picture. So, what are the primary reasons to be bullish or bearish on Meta right now, and what price points should you watch for confirmation? On the bullish side, Meta's core advertising business is thriving, with projections for substantial revenue growth in 2025 and 2026, driven by a recovering digital ad market. Their aggressive investments in AI, particularly the superintelligence network and AI-generated ads, could unlock entirely new revenue streams and solidify their competitive edge for years. The stock's current price-to-earnings multiple of 29 is actually below its 10-year average of 34, suggesting it's reasonably valued despite its strong performance. This attractive valuation makes it appealing to long-term investors. The upcoming Q2 earnings report on Wednesday is the most immediate and potent catalyst. A beat on expectations, especially with positive AI updates, could trigger a significant upward move. Short-term bullishness would be confirmed by a sustained break above $718 on increasing volume, followed by an assault on the stronger $725 resistance. If 725 breaks, the path to retesting the $747.90 all-time high becomes clear. Long-term bullishness remains strong given the company's dominant market position and future growth drivers. However, there are important bearish considerations to keep in mind for Meta. Meta's astronomical $44 billion capital expenditure on AI infrastructure over the past year is a considerable financial burden and carries execution risk. There's no guarantee these massive AI investments will yield immediate or sufficient returns. Increased legal and regulatory scrutiny from U.S. lawmakers regarding business practices, content moderation, and user privacy remains a constant overhang, posing potential fines or operational restrictions. A miss on Q2 earnings or any negative news concerning their AI rollout could lead to a sharp correction, as investor confidence might waver. A short-term bearish signal would be a decisive break below the $710 support level on high volume, potentially targeting the $700 mark, and then the critical psychological $680 support. Failure to hold $680 could indicate a deeper correction. In the long term, severe regulatory action or an unexpected slowdown in the digital advertising market could pose significant threats to Meta's revenue model. To recap the important price levels to watch for Meta. The all-time high is $747.90. Immediate short-term resistance stands at $718, with a stronger resistance zone around $725. Key support levels are found at $710, followed by $700, and then the more robust long-term support at the $680 mark. For an unbiased prediction, a strong Q2 earnings report with very positive AI commentary could easily propel Meta to retest and potentially surpass its $747.90 all-time high, with a 70% likelihood, reinforced by high volume and broad market enthusiasm. Conversely, a disappointing earnings report or unexpected regulatory news could see Meta fall back towards the $700 support and potentially $680 with a 30% likelihood, especially if accompanied by heavy selling volume. The key conditions reinforcing these likelihoods are the Q2 earnings results and clarity on their AI monetization strategy. Keep an eye on Wednesday's earnings call, any updates on their AI initiatives, and any new developments regarding regulatory scrutiny, as these will be critical in determining Meta's next big move. Always remember to conduct your own thorough research and manage your risk when trading in these volatile markets. Thank you for joining us on Explain the Charts, and we'll see you in the next one.